Hello everyone! Today I will talk about why I believe it is important to build your own dividend schedule. What do I mean with a dividend schedule? Well, let's start with the basics and let's do that by taking a look at my portfolio. So, I did not show you my complete portfolio yet, but as you have seen in some of the deep dive videos, I have, for example, for farmers or Nvidia. You can see all my positions here, which are currently 9 positions, and all of these companies pay dividends. Some of them pay it every year, some of them pay it twice per year, and some 4 times per year. AMD is actually the only one that doesn't pay dividends, and how it usually works is that tech companies or companies that are supposed to grow more with their stock, they pay less dividend, and companies that are supposed to grow less, like for example PepsiCo, it's not a grow market of course to sell beverages, then they usually pay out more dividend. When we go a bit further down here in Getquin, we see this dividends section where you can see the total dividends for this year. So it is estimated that I will receive 402.99 euro. I will zoom in a little bit here. That makes it a bit more clear. So 402.99 euro, and as you can see, I've already received 40.23 euro. You can see the exact schedule here by month. And once you buy a stock, or when you buy a stock, you can also find when the company pays dividend. I consider it as an important feature of the stock to check before you buy it when the dividends are being paid. And of course it depends on your own financial situation, but maybe you have like some seasonal work, or there's like some months of the year where you think you can use a little bit of extra money, and if you invest in stocks that pay out dividend in that year, or if you take that into consideration when you buy the stocks, it can, well, become very helpful. As you can see here, in February I didn't receive any dividends, so 0 euro. But for example, in May I will receive 175.30 euro, which is almost half of my whole portfolio. It means that for the upcoming stocks that I'm planning to buy somewhere in the future, that I don't really want to have dividend in May again, because then May will be a huge spike, while I should be aiming to have dividends in all the months of the year, so that in the future, hopefully, it will be a, let's say, more or less stable income throughout the year. Let's take a look at all the different stocks that I own, because I own some stocks that are considered dividend stocks, but other stocks that are considered not dividend stocks at all. As I already told you, AMD, for example, let's go here, and then you see that there's no dividends tab, so there are no dividends for AMD. But also Nvidia, when we go to Nvidia, you see the dividends, and you can see here that in the last years the dividend was extremely low. It was just over 1 euro cent per stock. 2025 it's 3.67 euro cents per stock, but the stock is worth 100 euros, so 3 cents of dividend is not a lot. When we compare that to some other stocks, let's go back to, for example, PepsiCo, and then go to the dividends of PepsiCo, we see that PepsiCo now pays out 5 euro and almost 4 cents, and that every year it was growing from 3 euro 50 in 2020, 3 euro 54 in 2021, and now more than 5 euro. It's of course also important to take into consideration the price of the stock. So when we go to, let's say, the last 5 years, in 2020 they paid out about 3 euro and now 5 euro. Well, the stock was around 120 euro in 2020, 110, 120 euro, and now it's around 136. So even though it's not a stock that is supposed to grow a lot, still PepsiCo gained a lot of value over the years. And if you are already owning PepsiCo since, well, let's say 10 or 15 years, then it means that you're already getting a lot of dividend from PepsiCo. And PepsiCo is actually a company where dividends kept increasing, I think, for the last 50 years. So it's a very solid dividend stock. when we go back, we have, well, all the different companies here, and what I did is I put all these different companies in an Excel sheet. Because what I want to do and what I want to talk about, I want to talk about dividends compared to savings. So most people usually put their money in a savings account, or, well, if you have some money left, you can either like put it in a savings account or you can invest it. You can of course also buy stuff with the money. You can also try to save up for buying a house. But with a savings account, for example, for the bank where I have my saving account, the saving interest rate is 1.7%. Now, with dividend stocks, you can of course build your own savings rate, basically, because as you can see here, like every month you get paid dividends. So you can completely make up your own schedule by selecting stocks that you think fit your schedule. And what you can also do is you can basically compile your own percentage, because if you only buy stocks with very low dividends, then you will get a low percentage. But if you decide to buy only dividend stocks, then you will get like a very high savings rate. For the 9 stocks that I own right now, I put them together in an Excel sheet, so that's this naamloze spreadsheet for all the Dutch people. And as you can see here, this is the different companies. And I didn't invest €1,000 exactly, but I just calculated what if you would invest €1,000 right now. So let's say €1,000 in Nvidia, €1,000 in PepsiCo, €1,000 in Pfizer, and so on and so on. Of course, for example, for Nvidia, the stock is around €100 right now, so you can buy around 10 stocks. We just saw that Nvidia pays out 3.6 cents, so it means that your dividend will be 36 euro cent on €1,000 invested. But for example, on PepsiCo, where the stock was around €136, it means that you can buy around 6 PepsiCo stocks. With the dividend that we saw there, it means that you get a dividend of €36.83, which is 3.68% of your €1,000 invested. I compared it here on the right side to a savings account. So if you would have a savings account where you also, let's say, invest those €1,000 in the savings account, it will always give you back 1.70%, which is €17. It might be that the savings interest rate goes up or it goes down. Banks can of course change their rates, so maybe it will fluctuate a little bit. And of course for dividends, that's the same. Dividends can change. But as you saw with PepsiCo, most of the time the companies try to raise their dividends, but of course the percentage of dividends can be influenced by the height of the value of the stock. Well, when we add up all these numbers, you can see what my strategy is here. I try to buy several stocks with low dividends, so that's Nvidia, AMD, SAP, Visa, they're all below 1%. But also try to mix in some very high dividend stocks, which are Pfizer with a very high dividend yield of 6.72% on €1,000 invested. Also PepsiCo, Alberts, Vinci, and for farmers they're all around 3 or 4%. And then when you add up all the numbers, you get to €9,000 invested for these 9 stocks. And from the €9,000 invested, we would get back this year €241.80. So when we translate that to a percentage, I know it would have been a bit easier if I put 10 stocks here, then it would be €10,000, and it's a bit easier to calculate, but yeah, I did this 9 because this is my portfolio right now. But if we take €9,000, then we get €241.80 dividend, which means 2.69%. And that's actually way more than the saving interest rate of the bank, because that would have given us €153 for the €9,000 invested, which is of course 1.70%. So it's a difference of €88. And of course it highly depends on how much money you invest. If you invest €1,000, then it means that the difference is way less. But in the end, when you keep on doing this and keep on doing this for the upcoming years, it will grow, because you can also reinvest the dividend that you get back from all these stocks. And if you keep on doing that, then you see that it will exponentially grow in the end. While for your savings interest rate, of course, you can also, let's say, reinvest your savings. You can put this 153 euro together with the 9,000, and then your savings interest will also be a bit higher. But as long as your percentage for your dividend that you receive is higher than the savings interest rate, it would always be a good idea to invest in a mix of dividend stocks and try to compile your own percentage. I aim to have a dividend percentage of, let's say, about 2.5–3%. So I think this 2.69 right now is a really good mix. The last stock that I bought is Vinky, which has a high dividend return with 4.01%. But yeah, basically you can try to find your own dividend rate that you think is a rate that you want to see back, and that is of course higher than your savings interest rate. You can also go for like only growth stocks and then not have a lot of dividends, but personally I think it's a good strategy to always try to at least aim for the same rate as a savings interest account from your bank would give you, which is currently for my bank 1.70%. So I try to aim like 1% higher, somewhere between 2.5–3%, and then try to get some passive income. Well, then with this calendar I'm trying to, let's say, in the future build it in a nice smooth way, and hopefully you learned something from this strategy. Thank you very much for watching. I also have a new link now in my description. I still have to put it in, but let's see if that's going to work. And I'm going to see you again in the next video. Thank you very much for watching. Don't forget to like, subscribe, and leave a comment. Thank you very much.